Alex, maybe dead money is a victory. It certainly hasn't been dead money. It's been going down. What exactly is Netflix going to have to say today to get people excited about this company again?
Well, Dom, I do not think it will be what they say about the previous quarter. Netflix has already estimated that they would lose 2 million subscribers in the second quarter. And if you think about all of the various macroeconomic headwinds that we have talked about on CNBC for weeks and months now, between rising inflation and a likely recession, or at least a possible recession coming down the pike, it would not surprise me at all if the number was even worse than 2 million. We'll have to see. So in order to get people excited about the stock, I think it's going to have to be something that's said about the next two quarters, the third quarter and the fourth quarter. Netflix will certainly talk about its content. They do have several shows, hit shows coming in the back half of the year, such as The Crown. They have a big movie out now, The Gray Man. But they'll probably talk about their efforts to crack down on password sharing in this new advertising-supported tier, which will be less expensive than the subscription tier that people currently around the world pay for Netflix, as ways to reinvigorate growth.
So that growth needs to be reinvigorated in some way, Alex, right? Because Netflix is one of those companies that caught a massive tailwind during the pandemic as everybody kind of got locked down and had to work from home or stay at home. People started to stream a lot more. But it also created a very hyper-competitive environment for Netflix, which is still the top of the heap, but everyone else is trying to kind of get market share from them. How much is that competitive dynamic, as we are showing, by the way, viewers, the price of streaming platforms and those listening on SiriusXM? I mean, you're talking paying anywhere from $5 to $15, $20 each for these things. How much is that going to weigh on investors as Netflix has to navigate that kind of environment where people are putting out that much more content?
So there's a plus and a minus here. The good news, the good news or the bad news, Dom?
I want the bad news first. I want the bad news first.
The bad news is if you're entering a period of economic downturn when consumers are going to be tightening their discretionary spend. And by the way, there are several studies already out there that this has begun already, where Americans are cutting back on the amount of money that they spend on entertainment. Netflix is the most expensive streaming service out there of the standard streaming services. That's what you just saw on the wall there. More expensive than HBO Max, more expensive than Disney Plus, more expensive than Apple TV Plus, Peacock, Paramount Plus. So for the good news is that's always been a feather in Netflix cap when it comes to its ARPU, average revenue per user. It's always been higher than the competition. And that's what investors like to see. But the bad news is it may be the first service to go if you're looking to save money in a time period where you may need to save money. We didn't see that during the pandemic, remember, in our last recession. That's because everybody was stuck home. So Netflix was actually a huge winner in that recession. This recession, where everyone wants out of the house and they're going to need to save money, it may be a different dynamic.